Okay, guys, we are going to talk about everybody's favorite company, AMC. And it's so interesting and it's so sweet that so many of you guys pinged me to request a couple of notes on the 8K. And also I got a lot of requests even from my last video to just what's the math of the proposal two? Because remember, there are three total proposals. That's the video on the proxy statement. So check that out if you haven't had a chance. But the second proposal puts the two share classes together and then is a reverse conversion. And I went through it and I had a slide and I was like, you know what? Given that this is so much confusion, I'm going to just show you how you would put together your own spreadsheet in Google Docs. And I know for some people, you guys are spreadsheet, heroes. And then other people, spreadsheet is this word that is like when somebody asked me to do sports because I'm really bad at sports, that kind of thing. So we're just going to walk through it. And that way, if you guys want to replay it, you can. I'll try to show best as I can the equations that I have everywhere. They're not, oh, I just took my ring in my hair. They're not rocket science, but this way we can kind of do it together. But I can show you what I'm looking at. Cool. Past performance not indicative of future returns. Y'all know I own the ape shares. I now from time to time try to trade the momentum as well on AMC, but I'm a little scared because honestly, that's not my cup of tea. David's going to join me after I go through the quick stuff. He definitely knows the charts way better than I do. And so you guys can ask him questions as well because he's definitely been having fun trading AMC, mostly to the long side because it's un-American to short, as he says. Okay, so let me share my screen. And first, I'm going to go through the 8K and some of the verbiage that got people a little bit freaked out. And then we're going to just very quickly go through the spreadsheet. That's how I'm dividing the video. Cool. Hopefully everybody's having a great Friday. Oh, and then after that, I'm going to take questions and David's going to be monitoring and helping me with that with a little bit, pulling them out later because I get so distracted so easily when I'm trying to read the chat as well. So hopefully but I will get to all of them best as I can. Okay, let's get into this. All right. So I just pulled out some of the verbiage, but essentially what you'll do if, here, let me just show you where you can find this stuff. But essentially, if you go to the AMC website and you pull off the most recent 8K, what the 8Ks are, they basically are telling you any material change. But a lot of folks read this and freaked out and thought it was new news. But in fact, what it really was the finalized closing document for the agreement that happened on December 22nd. So I've highlighted and read the relevant things to try to break up this massive wall of legal text. Okay, so the first thing that I highlighted was this is the same as the second press release that came out. And this is what they issued, and which was 106,595 AMC preferred equity units. Okay, remember that the preferred equity units trade up to the preferred stock, and then that converts to AMC shares. And I noticed that some people didn't realize there's actually three instruments, and so when they go to do the math, they get really confused. Fair enough. Totally is one of the more confusing structures. Don't feel bad about it because I literally have had hundreds of comments requesting a little bit more detail there. But so they issued the preferred units, which roll up into preferred stock that then gets transferred into AMC. But ultimately, what was clarified in the proxy statement was that it's just one ape share goes to one AMC share currently if the vote passes through, but I'll show you that math in just a second. And then the second thing is what it was that the money was used for, because you always, when you make money and you have to file with the SEC, is tell them what you used it for. This was pretty much identical to the press release from December 22nd, except the finalized share count was not in that press release, whereas it's now very much so clarified. And what they bought back was a 10%, 12% cash pick toggle second lien note due in 2026. Okay, that's fancy. I'm not going to go through gross detail on what that is, but that's actually a pretty good deal because this was rocking a pretty aggressive interest rate. And also it was due in 3 years. And they do have debt that's closer to 5 years out. So they're just buying themselves. And it's good is the way that we want to think about it because that interest rate was high. And then, so then if you read through it, it'll tell you specifically to Antara, what was exchanged and how it was exchanged. But this portion reads a little funky in the actual amendment of shareholder stuff, which you also will want to go through the amendment. Hold on, let me actually stop sharing and just show it to you on the AMC website. One second, because I just realized, if you guys can't find this, or if it's not something you're used to, but you'd like to double check everything, which you 100% always should be able to do that. This is the SEC. You just go to the very top there and you click on SEC filings here, and it'll take you to this page. And you're looking for actually more than one document. So you're going to look at this latest 8K, right? And then you're going to want the second amended statement of beneficial ownership. And that document is specifically so they had to file both because the second document tells you exactly what Antara owns as the beneficial shareholder, and it repeats the terms that are specified in the 8K. In like, I mean, none of this language is easy if you're not accustomed to reading it, but it might be like fractionally easier in the beneficial ownership statement than it is in the 8K. But the documents all go together. They're not separate things. And also, if you're new to this whole scenario, you will also, strangely enough, want to compare and contrast it, but it does look more or less the same to the press release, this one right here. No, sorry. You'll have to go to the newsroom and go to the press release and just keep going back. It should be this one right here. Raises 110 million of new equity capital. And when you do that, you'll see that there's not anything crazy or gigantic going on. Now, where some people got very intense was this particular verbiage in the second paragraph of that document. And I really wanted to go through this because I can kind of understand where, some of you just were like, I don't know what to do with that. And then some people told me that they saw some social media folks that were a little bit intense on this. And that's this verbiage here. Sorry. The second piece of it clarifies the debt repurchase and what it was used for, which was the Odeon debt refinancing. Oh my gosh, if I didn't pull it, I'm going to be so sad. Oh, sorry. It's this second paragraph here. So it tells you up at the first paragraph tells you what was done and who got what on the shares. And then don't worry about what a forward purchase agreement is. All that means is they agreed on December 22nd. There was going to be a bunch of closing costs. And then they knew that they had to nail out those closing costs. And so the dated date of all that stuff was going to happen a little bit later. And if you'll read the 22nd press release, you'll see that there were two tranches. So it kind of corresponds with that. But that's the instrument that they used in order to allow that purchase to happen. But the timing of it and all the filings that would be associated with it, booked last year, but then giving time for all the legal filings that have to happen. That's all that's going on there. There's nothing crazy, nothing special. It's just weird, but very legal, very right way to do kind of investment banking, for lack of a better way to say it. Okay, the second paragraph is what freaked people out. And it's this one little phrase here that says, in accordance with the mutual waiver, the lockup restrictions will not apply to sales of forward purchase APEs by the investor. The investor would be Antara, in an amount not to exceed an aggregate of 26 million forward purchase APEs and sales of APEs in the company in an amount not to exceed 140 million. The company also agreed, and then it goes on and so forth. Okay, let me explain to you what that's all about. And I'll leave it up on the screen so you can read it again and again, because that legal language is not fun. What that's about is this. They wanted to make sure to put that verbiage there so that any shares that Antara already owned, which I'll show you when you see the total number of shares, you'll realize that there's a little bit more to it than what maybe is being said, that they didn't just short all of the ape knowing they were going to receive this other ape. That is technically sometimes something that people do, but this kind of stopped them from doing anything more than 26 million, which essentially gives them a little bit of wiggle room for just, moving stuff from account to account and any kind of redemptions that they might have that have to be addressed. And just to give you a sense for it, I put the total number of Antara shares here at the very top. So they end the quarter, or end in the filing on that happened on the 10th, they show 258 million shares, which if you add up everything, you'll see means that they aren't actively selling or doing anything crazy. Everything is totally above board thus far. Now, I'm going to go through the math in just a second. So this is then the second tells you exactly what kind of discount they got on that debt. And obviously there's some closing associated with it, but specific to Antara, remember there was also a release on the 19th where they were buying stuff back at 30, 40 cents on the dollar. For Antara, they bought it back at 50 cents on the dollar. So this is really great because it means that basically they got to keep the other 50% essentially that they got from cash. Minus the interest that they paid. Now the debt wasn't, I mean, it's still this PIK toggle, and then it was this 5 and what is that? I forget, 7/8, 5 and 7/8. Is that what that is? Subordinate, senior subordinate, also due in 2026. And what we'll then expect to see if you then read the annual report, every annual report has a oh gosh, what do you call it? It has a chart that tells you year by year how much debt is due. And so we should see debt being eliminated primarily in the 2026 vintage. I think they call it like a vintage chart or something like that. I don't know. The debt guys do their own thing, but I look at it on the regular when I'm reading the annual report just to get a sense for how much runway the company has. But it looks to me like since all of this debt is coming from 2026, it corresponds with what was said in the press release on December the 22nd, namely that he's trying to term out the debt. He's trying to give himself more time before he's got to start paying bills like crazy so that there's time for the transition to happen. So that's the other piece that is in here once again, but clarified really crisply because it wasn't quite as straightforward in the other two releases, precisely which specific debt instrument was purchased. So that is clarified here. Okay, next little slide I want to go through. Okay, I'm going to come back to this one. Now I want to go to the spreadsheet, and then we're going to come back to recorded activities, because what I really want to demonstrate, since some of the messages I got demonstrated that people were very concerned or really wanted to feel confident that there's not something extra going on. And I think given how much everybody with AMC has been through, that's a normal reaction. So I get you on that. But I really want to show you next the spreadsheet. Okay. And I've pulled out the Schedule 13D and other stuff as well, so you can really clarify where this is coming from. This is what I did for coloring to try to help out, but I will toggle over each piece so you guys can see the equation here in the equation bar. For those of you that are spreadsheet gurus, this is very easy to read through. For those of you, but I'm going to read it as if people are not spreadsheet gurus. Okay, so let me go down here first. Okay, this is the total shares outstanding. So we're going to do this blue boxes stuff first, and here's the number of AMC shares. And yeah, so interestingly enough, there was a little bit of a difference in the 8K on how many shares were outstanding, and so that one could create a little bit of a nuance. Now it's only 29 million shares, so it should not be the biggest deal in the world, quite frankly. But realize that from the proxy that was filed, the 26th last week, 2 weeks ago, at the end of January, it said 929 million ape shares. But then in this 8K, there was another piece of verbiage that was 900 million. So there's a little bit of a remainder that's off a bit. And so as a result, I'll show you that the share count is very relevant to being able to correctly calculate what the implied prices would be if everything goes through. Okay. So that's the one thing to note. So again, oops, sorry. This number right here, the 900, which I'm going to use, comes from the most recent 8K. This number is a little bit different and comes from the proxy statement. If you want to be conservative, use the proxy statement number, and then just be happy that the 8K number is what it is at 900. But I'll have to probably email investor relations and try to get some clarification on that. with AMC, now in general, when you look at it, it reads as the amended statement. So technically, the 900 is probably right, but but really, and because of how the math works, you do want to just double check whenever you can if there's something that's a little bit unclear. Now, the AMC shares stayed the same in both the proxy and what have you, so no change to AMC. The other thing that was a little bit interesting was that the filing from the 8K showed 258 million shares that Antara owned, but the math from other spots actually shows a different number, 257 million. So it actually shows that Antara has about a million shares more. That's how I feel fairly confident that there's nothing crazy going on Antara's part. And you'll see the 13D in that second amended notice that I showed you. So let me just clarify that, because I know a lot of you guys are really trying to get something very crisp so that if you could even replay this video, you'll be able to follow along. So the 13D is going to show up. The 13D will be in the AMC website. You want to go again to SEC filings, and you're going to go here to the amended statement of beneficial ownership, and you're going to press on this down arrow, and it will pull you up. You see the filing type says 13D/A. That's what that's all about. And when you go in that filing, it will show you very clearly that that he has more shares than was in the original proxy statement. So the proxy statement had this in it, which was a chart to try to help you understand why proposal 3 existed. And the reason they needed you to understand from this chart, sorry, I didn't realize I stopped sharing my screen. Okay, so when you go into the proxy statement, when you go into the amended shareholder statement, the 13D, you'll see something that shows very clearly that the share voting power is 258 million because he has shared dispositive power, which basically means they own 258 million shares. But in the proxy statement, and this is there's still nothing crazy going on other than, the finalization of an investment banking deal. Okay, so they gave you an approximate, which is why this is a preliminary proxy. You'll see that they were estimating that the deal would close with 257 million shares. So that's how I know there's not something crazy going on at Antara. They're just doing business as usual, as you'd expect in good faith. That number shows it. That there's nothing else happening. Now, I want to show you one other piece, because I think this also got confusing for folks and was part of the reason why I think a lot of folks were like, May, it would be so cool if you would just walk through it and explain it from your perspective, not saying the other, and that's this chart that also shows in the 13D. And I can get why some people who maybe aren't accustomed to looking at the 13D statement versus the 13D websites that aggregate that stuff might get confused, because you do get this chart here. And the most important thing to notice about this chart is that the dates on the trade are month-end related. So essentially, every fund manager has redemptions, and they may have monthly redemption, they may have quarterly redemption. There's any number of things. And you can kind of see, so Antara consists of 3 different funds that have AMC. I mean, it has more funds than that, but these 3 funds within Antara hold the APE shares. And that's the Capital Master Fund, which is probably their largest fund, given that how much is in there. And then they have 2 opportunity funds. Probably when it's called something like Corbin Opportunity Fund, probably it's a separately managed account by a big probably foundation would be my guess, but I'm sure that's a Google search away for anyone. But they also are managing that money on behalf of whoever Corbin is. And so, and since it follows ERISA, it's probably a pension related type fund, because ERISA would absolutely apply specifically to pensions. But that's really small. Most of it went here, and you can kind of see that the buy and sell orders. So the first sell order happened. It was very small, well within the limit. And that likely was a baby redemption that they had. Someone just wanted to put their money or reallocate it elsewhere. It's a big nothing, to be fair, at 962 for the size of assets they have, because you're only at about $1 million, a little bit under 2 million, right? So that is not anything but probably somebody needed the money back right at the beginning of the year. They turned in the redemption notice in December or however long the redemption period is. And then Jan 1, they had to go ahead and sell the shares in accordance. And they probably sold a whole bunch of stuff associated with that one client that redeemed. Okay. That happens all across America and then some. It's just normal redemption activity. The second piece is probably additionally because you have a sale on the 3rd and then a purchase on the 6th. What that is that they were matching redemptions and redemptions that money that and then new money that came in, and the net of that was equivalent. So maybe somebody pulled 100 or like gave them 100 million. Let's just think big, right? Maybe someone gave them 100 million, someone else took 100 million. Alternatively, someone gave them like wanted maybe in a different fund, they said, hey, I no longer want it in this fund, I want it in this fund. And so there was like some swapping around. But when it netted out, it was all the same. And so from an accounting perspective, they have to do this particular activity, which is sell it on behalf of the person that redeemed and then buy it back on behalf of the new people in so that they can get an actual mark on what's owned. So this technically, I mean, it might be called short against the box. I feel like David's going to correct me, but it's really not a bad version of short against the box because you're literally doing it as an internal mark so that you don't have a problem once you do people's financial statements, given that they're investors in your fund. So that, again, is also a big nothing. I would ignore that, especially given that it happened on the first Friday of February. I'm pretty sure that's what that is. Okay, hopefully that explains that, because I'm sure that part of the reason people were very freaked out had to do with that portion of the 13D filing. All right, next, now let's go through the actual spreadsheet for folks. I'm going to do this beginner style because, everybody has something that they're good at. And I have done way too much time on spreadsheets and probably not enough time in the gym, quite frankly. So if you should feel nothing. And if you want, one day I will film myself in the gym just in case you guys really want to see what embarrassing looks like. Okay, this is the spreadsheet on how to calculate it. I wanted to do this because sometimes when I'm talking, I skip steps. That's not fun for other people who may be only doing this for the first time. Oh my gosh, these are the wrong closing prices, so no one freak out on me, please. So let me look and see. So AMC closed at $4.90. So we'll type $4.90 in here. And okay, let me just set it up. Sorry, guys. Sorry, I had a phone call right before I was supposed to do this. And then $2.30 is what we closed out APE at. Okay, so let's go through how to set up this spreadsheet. Okay, this is the spread calculation. I'm going to just increase some of these to make it easier for you to view. Spread calculation, cool. And then APE, you guys know, closed at $2.30. Let me make this a little bit more readable for y'all. Okay, and then shares outstanding, I'm using the one that was in the 8K filing. But since I still have to get investor relations to come back at me, it may be interesting for you. I'll also swap it so you can kind of see. So shares outstanding, and then you just multiply. To get the market value, you multiply cell C2, which is $2.30, by the shares outstanding. And that tells you that the market value for APE is $2 billion. And let me tell you, if you're using a data feed, I've seen so many wrong data feeds that it would not be the right call to use a data feed to establish market value. The data feed, when you have multiple share classes, is almost always wrong. Sometimes, and it just has to do with that is not for this episode. Okay, we'll talk about a different episode. Okay, but this is how you would calculate it. It's total shares outstanding of APE. That's $2 billion just on the APE shares. And then you do the same thing. See, C3 times D3, you do the same thing if you're going to set up your spreadsheet, and you'll get the market value of AMC. And then I should have done this to make it really viewable. The total market value of AMC altogether should be this plus this. Okay, so a true market cap because these shares are 100% convertible, is going to be the total market values added together. Okay. Now, this is very important because I'm going to show you. Oh, I did do it down below. Goodness. You know what? I did the spreadsheet so fast. I did do it down below, but my bad. Sorry. Here you go. All right. E3, E2 plus E3. And let me type that in so you guys can see it. Okay. Now, total shares current is just summing these two up. Okay. So you're literally just going to take D2 and add it to D3, and you're going to get 1.417 billion shares. And the only reason that this looks a little different from the proxy statement is, again, because in the 8K, I can't tell if that's a clarification versus the preliminary proxy, or if that is just some weird thing. So I'm going to ask investor relations. But essentially, that's why I'm showing you the math in case these numbers shift around or change or whatever it is. Okay. And then on a post 10 for 1, you're going to have 141 million shares. Okay. So then what you're going to do to get the implied price is you're just going to take that total market value and divide it by 1.4 billion. Okay, so I did it the long form way, but obviously since D2 and D3 are equal to, D2 and D3 are equal to D4, I could actually also just do this so that I can see everything really clearly as well, and I'll get the same number. Okay, so again, that's E6, which is the total shares divided by the total market value between the two. And now I'm going to pause for a second and really make sure that you see that it's very clear that the total market value is going to change every single day. So if you wanted to track this, because I noticed a few of you were like asking me and you weren't sure what the price is, and every day you ask me, I type in it's approximately this, and then I feel really bad because I'm not sure if it's obvious to you that the price could swing every day depending on what the price of AMC and APE is, right? So if the price of AMC goes up but the price of APE doesn't, let me just show you. You'll see that the implied price goes up, right? Alternatively, we were at 390, I believe. Woo! Where did it close at? 490. 490. Sorry, guys. 490, I think it was. I don't want to freak anyone out. I know everybody's really sensitive. Yeah. Okay. So if you guys set this up for yourself, then you'll be able to play with how the price of APE affects the implied price versus how the price of AMC affects the implied price on a daily basis. And I want you to see, because there's so many more shares outstanding of APE, that's why I keep saying my best bet, given my limitations as a trader, let's call it, is to help the AMC shareholder by buying the APE shares, because there's just more of them at this point. And once you play with this spreadsheet, you'll see why I feel the way I do. You are getting a discount on APE, but because you're pushing APE up, it makes the spread every time. It just helps with the supporting the spread. But the spread obviously still exists, because as long as the price of APE is lower than whatever the implied price is calculated at each day, then you're getting that to help support APE. Okay. Once that flips, then it'll be AMC that, you know what I mean? So at all times, technically I'm going to do this, but hopefully you guys won't get upset. If I flipped this, because there's less shares of AMC, you'd see what would happen, right? So then AMC would be the one that's cheap and APE would be overvalued, right? But that's not how it's rolling right this minute. So I'm going to support APE. And then you guys should do you. It's just, everybody's got their own investment style. Some of you are better day traders, so AMC makes more sense for you. I'm really not great at day trading, that sort of thing, okay? And then the implied price post split, all you do is you divide that by 10, because basically and there's a couple different ways that you could do it, but all you're doing is taking whatever is the implied price, and then multiplying it by 10, because you're going to increase the value. And what I want you to notice is that the market value doesn't change, right? It's all just based off of this total market value. Additionally, you can see that this is also reduced by 10. And so everything is just 10. So hopefully that clarifies for folks that are like really nervous or hearing too many crazy things, or it just seems really inconsistent. Hopefully that clarifies. If it does not, I'm open-minded. Stick it in the comments. I'll keep trying to get this clear, because I do think that it's a little bit scary and freaky the first time you see it. Now, again, I just want to show you, this was the original filing. This is this red chart. Okay. And so I want you guys to just notice this 27%. This comes from the proxy statement and was given as an approximate. And the verbiage surrounding it is, if you add up all of this, you'll see that they still don't have 50% of the vote off of just directors and the two major shareholders. So there's a bunch of people out there that are just pretending like the vote is obvious. The vote is not obvious. And the reason the vote is not obvious is if you add all of this up, even with the directors, you don't get to 50%. Now, in fairness, it'll take some effort, but it won't take the worst kind of effort to get it done. See, the directors only have 1.8. They have a fraction. So they're only at like 32% of the vote. They need the other 18% of shares to vote. If they don't, then but this should be enough to get proposal 3 through. And proposal 3 will allow them to keep trying to get get an answer one way or the other. So 50, whatever is that 51, they got to get over 50% according to the way that they wrote the original documents for AMC. And so that becomes important. I do, again, want to highlight in the proxy, Antara owned 27 and change percent. I pulled up I probably did it wrong. Because they now own 58 million shares, which I'm not sure, 258. If you go in there, I think it says they have closer to 28% of the shares. So I think all they did was round it up to something even, or alternatively, it's just how the banking deal ultimately closed, because prices shift around and there's other things that were agreed to and stuff like that. But none of this looks abnormal. Okay, that is all I had prepared. Thank you for listening to all that. I know that's a lot. Let me bring David up, and then David, what kind of questions?
Okay, we're trading AMC. I mean, not but AMC just on. It's called Fibonacci. Fibonacci was an Italian mathematician from the Middle Ages, like 1200.
Yeah.
So he's got like 1100 years of precedent.
Yeah, the Fibonacci's is a great trading tool. I always just call you and ask you, though. What does it say on your phone?
Well, I mean, you try to figure out why a price stops at a certain level.
Yeah.
And you do Fibonacci, and that's exactly why it did. Like AMC topped at 733, which I mentioned on a previous broadcast. I mean, the actual number was 726. But when I traded on the floor in Chicago, the actual Fibonacci number was 0.618. But everybody would put in sell stops or buy stops above or below 0.618. So they would trigger the stop, and so it would go further than 0.618. So, but it would not go below beyond 0.66 in most cases. So, so I said, I mean, it doesn't do an AMC holder any good to sell stock here. So 733 would just be a point to not buy, right? But now it's pulled back from 733. It went from 377, which is a double bottom. That's technical, right? That's Fibonacci, but that's not Fibonacci, but it's technical. It went to 733, which was Fibonacci. Now it's pulled back to 490, which is another Fibonacci retracement. So based on Fibonacci studies, that would be a buy right at this price.
Okay, and then where would you go? What are you thinking? Where would you be looking for it to kind of trade?
Well, it's hit the 733. So
you think it'll test the 733 again?
it could either trade between 733 and 377, or I mean, in November it was what, 27 and a half? No, that was August 22, it was 22 and a half, I think. No, I'm sorry, 27 and a half. Right. So,
Okay.
I mean, it's got plenty of room to the upside.
Okay.
But
All right. We just got to make sure that you guys know this.
it's very important that it's
Hold
made
on.
a double bottom at 377. There's no reason you should ever short AMC.
I think there's gonna be a lot of people who agree with you. Okay, so
Okay.
Eki, as you know, that's not investment advice. All we're doing is we're going through specifically the Fibonacci numbers, which we tend to like a
Yeah,
lot.
write down 0.66. You just take the recent high and the recent low, and then the 0.66 would be a retracement. So it went from 377 to 733. Take that difference, multiply it by 0.66, take it away from 733, and you get 490. So here
We're
you
gonna
go,
have to
right
do
here.
that at some point on a
That's why
slide.
I stopped right here. Isn't that amazing?
I mean,
It
I
stopped right
always
here.
think it's amazing, and then yeah. Oh, good job. Is it like hold on, wait, let me actually turn this chat overlay. So yeah, ooh, it's not showing. I don't know what's showing. Trend board, you're so funny. These are great comments. Yeah, I know. Like you don't want to pay attention to this math in class, but when there's a really good reason for it, suddenly you're like, I'm paying attention.
Oh, it works. I mean, there's a lot of stuff that works, but always keep the fundamentals in the back of your mind if you're a technician.
Yeah. Okay, Israel Satlin, hey, shout out. Love these comments. What else is in the Antara funds? Okay, this one, you guys, it turns out when all the big funds do file with the SEC. So if you just Google search SEC filings for Antara, you can absolutely get their holdings, which will be coming out fairly shortly because they do come out quarterly. So if you were to Google search right this minute, you might get the filings from September, but soon you will get the filings from the end of the year. So it'll still be a little dated, but then you can take a look and kind of watch that. People absolutely do watch these things like a hawk, and it'll become like the news of the day because it usually comes out just when people are like curious about it. So definitely you can just Google search 13D filings and then make sure that you look at the date because they'll almost even the data. So what happens is these data aggregators go into the filings and just scrape the data and stick it up there. And if you're kind of like not used to seeing it, you don't realize that that share count is associated with the date. So just look that up and be very careful as you're looking at it. But sometime actually fairly soon, the December quarter, like the December end filings will come out and you'll be able to see what else Antara owns because of the nature of what they do, which is special sits and high yield, that sort of thing. You should not see huge swings. So what they had in December, it's not like they're a high frequency trader or technical trader, something like that. So it shouldn't change. Whatever you see should be accurate. It's really cute. Thank you for all the like encouragement for those of you that are supportive of me going to the gym, which I definitely have to do more common. Okay, this is what Jorge, hopefully I'm pronouncing your name right because I know you're always very supportive. That's what he's seeing on his technicals for support. Is that similar to what you were saying for Ape? Or you were talking about AMC?
Yeah, Ape is what, preferred stock. So no, the upside, in our opinion, is AMC.
Yeah, AMC is going to be the better one to trade. Ape is like going to be slow moving through all of this because I mean it's really attached to AMC more than anything. But AMC is going to have more short covering. It's going to have more market mechanics going on. It's going to just have more stuff that's going on to it.
Big short is Antara, right?
Antara's not short. No, Antara
No.
owns the shares and can't. Yeah, Antara won't be able to sell the shares according to all of the filings until well after until 3 months. So 3
Oh,
months.
I thought Antara was a big lender. So they're shorting the stock to hedge
No, they
themselves.
weren't. That was the rumor. That's what I wanted to show very
Oh,
clearly.
cool.
So
All right.
yeah, no, I'm glad you asked that because it's a good prompt in case that was confusing. If you look at the 8K filing, which would be the most recent filing, you'll see that not only have they not been shorting the stock, they actually have a million more than the original filing from the proxy statement. So the original here, let me just show it one more time for folks that are coming in a little bit on the late side. No big deal. Um, Okay. So this was the 13D. Hold on, let me just make some room. I screenshot it, but I should have probably just put it on a slide. Okay. So if you look at it, their share voting power is 258 million shares. And then this was originally from the proxy. I'll try to make it bigger. But originally from the proxy, it was 257 million. Now, the difference between the two numbers is probably just the fact that the deal needed to close. But nothing in that suggests to me that they were shorting or doing anything insane, because otherwise it would show very clearly on the beneficial shareholders situation. And all that you saw on that filing, again, the only sales that you saw, this was it for what they did the entire, from January forward. So the proxy statement, or sorry, the release came out on December 22nd, and this is literally everything that was done. Hold on, let me undo this overlay so you can see it. This is everything that was done as relates to APE. They don't have any AMC at the current time. And you can see that it's one little baby trade because they probably had a redemption. That's a sell order. And then, like I said, just these baby little, like these 5 million that are literally look like short against the box, but what they are is marks that they have to take because one guy gave them money and one guy took money out. And so they have to mark the new assets a very specific way. So that probably did not trade. That's only an internally recorded trade. And that's what it would look like because one is a sell on close and the other is a buy on open. And so everything that was done over the weekend is what the difference in that pricing is. There's nothing, and that is, by the way, you cannot cheat that because strangely enough, when I first started working in finance, one of my clients did actually cheat that and was a big harassment, strange thing. It had to do, there is absolutely a law that does not allow you to play the aftermarket with shares on this type of thing. So that's just, that's part of the reason why, for whatever reason, when I look at it, I see something maybe a little different than other YouTubers might see. But that's all that is. It's and not only is it very legal, you have to do it that way. Let me say it that way. Okay, did I miss any of the chats, David? You got better eagle eyes sometimes on this stuff.
They can outsell 26 million as the waiver.
Yeah, so that's about. So since they have, and I just want to show you guys the size of these numbers so you can see what's up. It's not a meaningful, like, relative to what they own. So they can sell. This is not gonna do it, believe it or not. Even though it's one trading day's worth, 26 million forward purchase. So this is 140 million. Okay, 26 million. But realize that the total that they have is 200. Sorry, that was from yesterday. The total that they have. Oh, you know what? I'm so silly. I did put it on there. Is 258 million, something like that. Okay. And so what they basically did, which I think is very reasonable. So they have 258 million. Okay. So they can sell 26 million. If even I would have expected that to be there. And the reason that you do something like that is because you don't know. So they have to hold the shares for a full quarter. Okay. But in that quarter, especially since this whole thing went down December 22nd, they could end up with a bunch of redemptions. Because if this fund has quarterly redemptions or something like that, and given the dates and how close they are, they would, if they had a big redemption, then they would have to sell shares in advance of that redemption. Otherwise, they would just clock the stock really aggressively as soon as the redemption is due. So in other words, if some fund, it wasn't a great year last year. So even if Antara did fine as far as returns goes, some of the pension funds that they manage money for maybe didn't do as well. Okay. And so if they were like, yo, Antara, I need my money back, they would have to sell. And it would be because they would be selling because they're losing a client. And if they win it, and so they gave themselves about a 10% wiggle room. So they would be selling more than just that, by the way. So that if they had a bigger redemption, because 10% would be a fairly big redemption, they probably won't get to that size, hopefully, because honestly, I don't want them selling a bunch of AMC either, but like you would want that wiggle room just to allow them to not end up with the world's largest position in ape, because then that would cause them a different set of problems. And the set of problems that would cause them is they would become one of those. They would become yet another piece of mechanics that the day traders could game, or the quant funds could game. And so that's what that is. Hopefully that clarifies. Okay, what else we got? We got some really good questions. Did you see any? Kim, that is a good question. I'm going to give Kim some love here real quick. So what I saw today was Macquarie, which is a pretty sizable, very well regarded investment bank. I have no idea why they're covering this cap size, because usually the big banks don't do that. But they had a note that suggested that all of theaters, they just didn't trust that the theater recovery was real, and so they downgraded, I think, AMC or something like that. And I think just because this filing came out and that came out, and it was just a lot going on, the market in general was down, and the market has had kind of an aggressive rally. I think all of that just came together in one fell swoop. But you always have, like, I love Ape and AMC, but every day I'm a little bit worried, to be fair. That's why I won't allow it to get too big in my portfolio as far as that goes. So, worrying is just a part of, like, sometimes stock ownership, but like hopefully that clarifies that for you. Okay, AMC must hold. Okay, we've got some other people that are looking at support and resistance this way. That's that. Like, what's interesting is that we love the fibs when there's stuff that's even bigger moves, and because AMC moves so aggressively, support and resistance, very clear. Definitely watch for that, because yeah, you're right. It could trade in a tighter bound. So totally respect on that. Brett,
What would
to
what
you.
would 25,000 ape convert to AMC after split?
Okay, big ads. I went through that, and I went through, let me just show you the spreadsheet. Just scroll back, and I literally, what I did, because I know a lot of you guys have this question, is I walked through how you could create this spreadsheet. And I did it specifically in Google Sheets, because Google Sheets is free. So some of you that are anti-Microsoft, you just go back to that section, and hopefully you're not also anti-Google, but maybe you can create some account that you feel comfortable with, and just pop in those equations. And then you can every day just change and play around with the price of Ape and AMC. And that way, because I really do feel bad when you guys ask me what the share price is, and I'm getting to it a little bit later than you posted it, and then I feel bad because I'm like, no, I really should try to explain very clearly why my answer isn't more precise. That's why it's not more precise, because it depends on what Ape and AMC closed out on a given day. And so hopefully you guys can create your own spreadsheet, and that way you can also monitor it in case, because like, if Ape or AMC move in very big ways, then all bets are off. That price will change pretty dramatically.
Hey, May,
Yeah,
here's a good question.
good
When
point.
it converts, won't it create a large amount of options, synthetics?
No, it will not.
Okay.
What will happen is that, so synthetics, I owe you guys, I know I owe you a video on that for sure, for sure, for sure. Um, okay, the problem with the word synthetics is it incorporates like literally any derivative instrument, and that and so what's really needed to answer that question thoroughly, which unfortunately, I mean, I could give you a short answer, but it would be technically wrong in every pot, because synthetics, technically all the options are considered synthetic, because they synthetically attach back to shares, and swaps are synthetics. And you know the only thing that is technically a synthetic but doesn't attach back to the, it's um yeah. So all that's going to happen, the reason it won't create more synthetics is because what will actually happen is the same thing that happens on the reverse split. So if you had a swap like, okay, if you had options, your options will collapse, which is why I have said more than once, make sure that if you're in options, you're doing 10 at a time, because otherwise, or you get out of them before the board meeting, which is, I believe, March 14th. Guys, correct me if I'm wrong. It's in all the documents. I think it's March 14th or something like that. But if I'm wrong, I'll pin a correction. But as we get closer to that date, just make sure you have 10, okay? Or alternatively, put a calendar for yourself if you don't have nice round lots of 10, because quite frankly, when options, when you have a reverse, when you have a reverse split on options, they actually have to roll up the options as well, and you'll end up with fractional options. Fractional shares are a pain to trade out of because you got to call the broker. Fractional options are a joke to trade out of because ultimately the broker will give you nothing for them because they know they can't find the other side of that. So you need to get out of that. I don't know what you mean by Brazilian synthetics. That sounds like something someone made up. But what I can say, just in case this is what it actually refers to, is there is a type of synthetic that you create so that people from another country can buy the stock without having to buy US shares. And that type of synthetic is an equity linked synthetic, which somebody may be then calling it the country that they're buying it in, and then the word synthetic, which they really shouldn't, because it's not to be mean, it's super BS is what it is. But an equity linked note or that type of synthetic is essentially going to be, it's basically, it has nothing to do with the underlying asset class. It's just linking to the price. The most common equity linked note that trades is actually on the VIX, because the VIX has no underlying shares. The VIX is calculated in a very specific way, and then there is an instrument that is linked to the VIX that people trade up and down, and that's what you actually have if you have a synthetic that is structured as basically something that trades unconvertible. So all of those things trade unconvertible, and we'll just have to do exactly the same math. Nothing new will be created. Hopefully that answers that question. Sorry, I don't know who Lou D is. Okay, guys, I try to keep the vibes very happy. So if I know someone, so I don't want to throw shade on anyone else. I apologize. It just every now and then I get a little sassy. Sorry about that. But yeah, that's I don't know who Love Lou is from Wall Street. Maybe he's in an area or something where they're more accustomed to calling it the country and then synthetic, but that's all that is. But and in fairness, I've seen people change the names of stuff in as strange as possible ways, because you would have never called the options market a synthetic, even though you would have known that would be included. It's just weird. Now everybody's calling them all synthetics, which I think is insane. It used to just be called derivative instruments, but I guess technically if it's not derivative from the underlying, then yeah, it's not actually technically a derivative, but it's all weird. Okay.
Man, let me ask. Can I ask you something?
Yeah, what's up?
Fundamentally, what's the big picture?
How do you mean on APE and AMC? Here's the thing.
Right.
The spread remains. So as long as that spread remains, the one that is trading underneath the spread probably is the easier one. Now, that said, the trading dynamics of AMC are probably more interesting if you're you, for example, or if you're a really strong day trader, or if charting is your cup of tea, which I always refer to you on charting versus trying to embarrass myself. So it kind of depends. As far as like, is AMC a good fundamental investment? When I looked at the last quarter, given how I'm specifically interested in free cash flow. Okay. Earnings is, given that this is a turnaround and given that there's just a lot of things that he's doing to try to move the company in a particular trajectory. What I really care about is that he has enough cash to do that, knowing that it's going to take a little bit of time. And the way that I see him setting it up, and it could work, it could not work. Obviously, the stock trades like there is significant risk in it. But essentially, sorry, I'm going to come back to dark pools. But since this question seems to be from a couple of different people, because he needs enough capital, period, in order to do that. That's what I'm watching for. I want to make sure that he has enough funding to do the thing that he needs to do to make AMC a great company that survives and is really very cash generating. Okay, so why am I using free cash flow instead of EPS or something like that? I'm going to get to that in just a second. And then the final thing is the earnings date has not yet been announced, but I will be looking at the earnings to really assess how to think about valuation for APE and AMC because, quite frankly, I don't usually do turnarounds of this nature where there's this much to turn around, quite frankly. But there's a lot of companies right now in the middle of turnaround, so it's not like I have no clue. But it looked like, from what I was seeing sequentially, that he was actually executing on what he was saying he needed to execute on, and that free cash flow was improving dramatically. So that's why I'm like, okay, interesting, especially given the first time I looked at this, the short sellers had made us like had made the spread between APE and AMC 7-1, which would have meant that APE made sense like in every possible way because there was no way he was going to need to dilute it 700 times. Do you know what I mean? But so that's where I started, and I still think that that spread is interesting to me. And I also think that once you redo the valuation, you are getting a lot of you are getting some buffer to try to give him a chance at these levels to watch to make to get the company to where it needs to get to. Okay, what is free cash flow? This is like this is a little bit advanced sometimes, but what you'll do is you'll open up the cash flow statement. And in some of my videos where I walk through other companies, you'll see that I do this specifically on Meta. I did this. So you can look at the recent Meta video because right now what's going on with him all hinges on free cash flow as well. But what you do is you take operating cash flow and you subtract out CapEx, capital expenditures. And it's important that you do that for something like AMC because one of the things that the bears are all cray-cray on has to do with how much he's spending to renovate and otherwise get this business around the corner. So so that's kind of the thing. And so that's why we're watching free cash flow. And he does talk about free cash flow on the call. So that's kind of where you're going to get that. Hopefully, Israel, that explained it for you. If you give me a thumbs up, let me know. Okay, what else we got? Is there anything else going on? Okay, yeah, I agree with you, especially at this point. They raised a lot of capital. They've termed out their debt. Okay, that is a very specific word that basically means that their debt was due on this day, this year, and now it's due like farther out. And what you'll do is the annual report will come out. That's probably what's delaying. That's probably what's delaying their call because they still have not told you the date of the call. But given that they had so much going on at the end of the year, the accountants are going to have to do a bunch of extra stuff in the disclosures and stuff. So that's kind of a normal situation. But yeah, given all of the things that's happened, if you were trying to do some kind of bankruptcy analysis, you would have to look at free cash flow. Okay. You would have to look at very specific parts of the balance sheet, and then you'd really have to look at what's going on the financing side to establish some kind of time horizon. And then you just have to be way smarter than me to think that they were going to do that, because I'm pretty sure that it's not like they're not taking in any cash. This isn't an impaired, like if the impairments that have happened to this firm have already happened. But you know, you never know until the quarter comes out, and I will absolutely be walking through the quarter. I'll try to do it depending on what time the call is. I'll probably try to do it within 24 hours.
Do they own the real estate, May?
No, well, okay. They did it like everybody else would do it, which is it's structured as operating leases, but you would still take that out as a part of CapEx.
Okay.
Okay, let's see what else we got. Eki, you're so funny. Let's see. Did you see any of the other questions? There's so many questions here now. Okay, dark pool. Yeah, some of you guys had questions on dark pool, more than one of you. Okay, what the dark pool is, it's existed for a long time, and I think that people have made it this mysterious thing because it, quite frankly, just has a cool name. But all the dark pool is it's so usually, if you think about it, when you make a trade, You trade, it goes to the broker. The broker then does what we call shopping it around, but they do it electronically these days. But back in the day, they had to shop the order if it was very big. If it was small, they still did any number of things. They might have some in inventory if they're a market maker. There's a couple different things, but essentially, you go through the broker. The broker then goes through all the different market makers and tries to work your shares a certain way and get best execution. Okay, that's actually a term. And then they charge you some portion of that spread, but they find their way to get their pound of flesh, and then suddenly you have shares. Okay, that's what's actually happening in simple terms. There's a lot of other machinations that go, but in the simplest of terms, that's what's up. There's a couple of other very specific operational things that happen. Not going to go through it, okay, unless you guys really get excited about it. But all of that is fairly automated as long as you're in equities. What the dark pool was that in this, I remember when the dark pool was kind of in the news side of things. So it would have been around like 2001, 2000. And what it was the broker, the asset managers were like, this is stupid. Sometimes I just have to trade something that is large enough to where if I send it to the broker, they're going to shop it in a way, and then I'm going to pay some fee that's really stupid. But now there's this thing called algorithms. Why would I do that? Let me just see if there's someone else that wants it that has the exact opposite issue at another asset manager, and put the order through that way. And so when it trades through the dark pool, people will basically do any number of things algorithmically, oftentimes for sure at this point. And for a lot of folks, their order management system is attached both to brokers stuff and also to the dark pool. So they're just looking for best price when they execute on your behalf. Hopefully I'm not using too much jargon. Stick it down below if I am. But essentially, if it goes on the dark pool, it's crossing with another asset manager that also needs that. And so, instead of having a broker in the middle charging you some extra fee, they're just going to cross it and try to get you best execution in that way. It is not some spooky place where mysterious trades happen, because guess what? When that happens, they still gotta like let the DTCC know. So I don't know why, but I've seen so many crazy things as relates to the dark pool, and some of it is, I think, maybe taken out of context is maybe what it is. Because I don't think anybody's necessarily trying to purposely misinform, but that's what that is. Hopefully that explains it. Are there any other, hopefully, why not a real? Okay, this one, halts happen. Okay, the dark pool was originally created to reduce brokerage fees for people that look, an asset manager doesn't have that money from no one. An asset manager has that money from you gave them money. So if you're like a pension fund and you gave your money, you outsource the management of money to like BlackRock or something, then it's you that's paying the commissions, by the way. It's not BlackRock ultimately, because they're passing that through in fees. So the dark pools were not this evil thing that was created, because given when it was created, hedge funds were small in 2001. Like if your hedge fund was, 500 million, you were a gigantic hedge fund in 2001 back in the day. I mean, you were ginormous. Okay. So like, that's not what the dark pool was created to do. Is it being used that way now? Different story. But in this case, I mean, it would have to be case by case. Okay. Like you'd have to show me specifically what happened, and then we could establish something a little bit more thoughtful there. Why the cancel orders? Cancel orders, I would need to see the context, Carlos, so I'm not sure. But in particular, if you short sold a stock and that order got canceled, that's probably because there was no locate. Okay, so that would be, and you're supposed to get the locate before you short the shares. That is one of the dangers of shorting shares, is that if you don't get a confirm on it, you are not short the shares. Okay, I'm not sure what you mean by PFOF. Not a real free market. Okay, I'm not sure why you feel like it's not a real free market as relates to this context. There's other things that maybe are associated with it, but it seems fairly free to me as far as that goes. I'd have to know issue by issue on what you're experiencing, but none of that should affect it. Okay. J Beebs, have a look at my video. Just fast forward, just rewind it back. You can see what the math is, and then you can decide. But the spread is not balanced. at this point. Okay, unless, I mean, it depends what your definition of balance is. If you believe that a spread should exist because we still have from now until the vote goes through, and you believe that there's a high probability the vote does not happen, then yeah, that's probably true. If you believe the vote's going through, and then the spread should just represent the time between now and this and it going through, plus the probability that he doesn't get 50% of the votes on the first go, which is a high probability, by the way, then I think there's still something to go. So let me take a minute and really clarify what I just said. Here's the deal. Some of you and some of the things I've seen out there, people are trying to say, well, they have the 50% vote because they own most of the shares. If you just rewind the video, you'll see they still need 18% of people to vote. But what you really have to understand is that it is very rare that 50% of shareholders vote their shares. Okay. That's why it was really vital that Vanguard is listed, because Vanguard has told, has basically indicated they will vote their shares. Whether they vote with, for, or against is hard to say. And some of the passive investors, some of the ETFs, you don't know what they're going to do, because there's been so much of this weirdness around voting shares on passive instruments, which passive instruments is mutual funds, ETFs, et cetera, that are not actively managed. So some of them may not vote at all. But typically it is very rare that not very rare, but it is freaking awesome, let me say it that way, if you actually get 51% or over 50% of people voting, period. To give you context, Berkshire Hathaway, which is probably one of the most active groups of shareholders, comes very close each time to 50%. Okay. And that's despite the fact that if you run down who the A shareholders are and the fact that they have more votes, it's kind of amazing. So that's why Proposal 3 is so important. And because Proposal 3 exists, telling you that they're a little bit concerned that they might have to go more than one round, the spread between APE and AMC should incorporate the fact that it is not a given that March 15th will be the ultimate date that any of this happens. Additionally, 70 whatever percent of the share, or the rest of the shares, are a combination of passive mutual funds, active mutual funds, active hedge funds, et cetera, et cetera, et cetera. And we got no clue how they're going to vote. And then there's a bunch of folks that are just like you and me and everybody watching. We don't know how people are going to vote. And so that's why if you look at the end of the proxy, you see this plea from Mr. Aaron to please make sure to vote your shares. Now, voting your shares, if you've never done it before, you're going to want to call your broker, because some of the brokers have it set to where it's electronically delivered for you and they actually deliver it to you. And if you're on one of the newer or more special, let's call it, brokers, I'm not going to throw shade, even though I have strong feelings about certain broker dealers, they may not actually ever give you any kind of meaningful notification that you have to vote the proxy. So since we know that the proxies are being delivered fairly soon, but you can check, they may, I don't think they've been delivered yet, because all I'm seeing is preliminary proxy. I'm not seeing final proxy, but the vote will be due in advance of that. And you will need to vote essentially before March 14th, but the proxy statement itself will be delivered before that. So just keep looking at the AMC website. If you have been trading or owning stock for a long time and have never seen a proxy statement, then for sure your broker dealer is got some weird setting where they believe they're delivering it to you electronically, but it is somehow not getting to you. So just realize that that's kind of the deal.
I'm going to throw in there's order imbalances causes market halts. I mean,
oh yeah, all the time. Is that
the market maker? I mean, people hate them, but they're vital.
Yeah.
And when they get too far on one side, and if it was a short position, then that's when they halt it, and they need time to get things in order.
Yeah, I mean, it's like the equivalent of I don't know soccer very well, so just make fun of me if I get this wrong, but I think it's like an offsides. So essentially, when it starts trading to the point where the market maker cannot make an orderly market. Remember, the point of all these exchanges is an orderly execution, orderly markets. And right. There's the innovation that's happened surrounding that is so phenomenal. I mean, back in the day, David was on the floor. He was responsible for making sure, it was like you could like a little tiny girl like me would have bruises if I was doing that, right? All the technology that has happened subsequent to that is what is required, and then still
Well,
because
I think they're making a good point. Like Bed Bath and Beyond ran 100%. So, I mean, maybe different market makers. I don't know. I mean, they
what
have
you
a
mean
point if AMC gets halted, but
gets
Bed Bath
halted.
and Beyond
Yeah.
does not.
Okay, that's true. However, like this week, I'll tell you all the meme stocks that I owned got halted at different times. So
Okay.
because we just had such a massive short squeeze. So I don't think there's like I mean like given how much these things ran up and how much some of them are running down, in fairness, I think that spread is actually supporting AMC and APE, even though today was pretty brutal and AMC. Like some of the other stocks, I think are even worse that are in like the smaller kind of dollar value size. But yeah, um, you know, like I told you, I think like 3 days last like Monday or something, I texted you. I was like, oh my God, like 5 of my stocks are halted. Some of them weren't even small cap, by the way. So I think that there's just really weird trading volume going on right now. I don't know another way. There was a question: do I think that there's something illegal going on? I don't think that there's something illegal so much as there's probably something that is like back in the day you didn't have quite so much mechanical stuff where people were trying to manipulate. Now you have people doing all kinds of really intriguing stuff, including trying to see if they can get in before the options chain expands and taking advantage of different brokers that don't have the ability to immediately update the options chain to like any number of things. So I think it's a hard question to answer. The only one that is unambiguous, I do think that the SEC needs to revisit, as you guys know, the reg show violations, because it's even if it's not being violated, the actual law itself is super messed up the way it wasn't written for what's happening in 2023. So I will say that. Um, yeah. Okay. All right. Some of you guys are going down a very negative route. I feel you on that. At the same time, I'm going to acknowledge that. But you know, we kind of, it's believe it or not, all in all, I don't know that it's gotten worse. I will say it's gotten more volatile than I've seen it before, and that volatility, though, I don't think is caused by. I don't think it's actually caused by something illegal so much as it's caused by the way people trade now versus the way they used to trade. So now you have a lot of quant funds, and then you have a lot of passive investors. This is a little bit less important for APE, but it would potentially be relevant for AMC because some of the small cap indices have it. And so sometimes, and then you have a couple of different, like you have an ETF for meme stocks, for goodness sakes, right? Like no one's even thinking when that's being traded. So like you have these dynamics such that once momentum gets behind a stock, it goes way more aggressively than it normally would have, like call it 10 years ago even. And that's not ideal. The only thing that can actually counteract that is trying to get more fundamental investors that are like, awesome sauce, my opportunity. That's actually part of the reason why I started Markets with May, because like if you're, I mean, like, look, I'm a retail person, whatever, blah, blah, blah. But if you were, fast forward 10 years from now and you've just been working forever and you've got bigger amounts of money, then you are also very impacted by, you can absolutely take advantage of the fact that the market's giving you opportunities to buy things and that the people that are selling it have no idea even what the company does half the time, and so like and that's something that we talk about commonly on the show, and then we use technicals to try to understand entry points and exit points. But for example, Meta, I don't think anyone went through the darn financials before they started creating news articles on it. I see this so often, it's not even funny. So like Meta, worst quarter I literally read because the only thing I was really looking for was for him to describe how he was going to actually turn the company around. And he told me it was going to be at least a year before he figured that out. So, David and I had a conversation both offline and online. I did that video and, we tried to find an entry point to short it because There's no fundamental reason. You got all these people that are using data feeds telling you that valuation on a discounted basis is somehow going to make it. The guy told you he's got no idea how the company's going to make money for a year, for goodness sakes. Now I'm paraphrasing, but that is what it is. You can't do a discounted cash flow on a strategy that doesn't exist. Okay, that's what I'm saying. But this happens all the time. Same thing with
Well,
Amazon.
he
Points
threw
out
a he threw AI in there.
that's true. I mean, so like it's really weird how this market behaves, but it gives you opportunities to go both long and short as a fundamental investor. You just have to, whereas before you had to maybe know a little bit about technicals. Now I feel like I'm really stoked to be paired with David, because you have to, the number one thing you learn if you are an investor is you can't fight the tape. Now, some people can because they're just baller rich, and they really, when they spend it, don't care. I personally am not in a place where I can fight the tape. Okay. So like that's the thing. But as a result,
I
for
think
those of
what's
you,
important is what the Reddit guys figured out was how to amass enough calls
yeah,
to pressure the stock up, and then the shorts have to cover, because when those calls, which are extremely leveraged, like what 100 to 1, so they're
yeah,
they create upside pressure on the stock, and then the shorts have to cover, which a lot of times are hedge funds, right? Yeah,
yeah,
what they did was ingenious, and it did
ingenious.
nothing. It created a lot more interest in stocks, which is good.
I agree. It was painful for the hedge funds though, but you know what? They're big
Okay.
boys. They can figure it out.
Well, they
And
should try to short companies out of business.
yeah. And in fairness, when the short interest is too high, you're just being kind of greedy. You know what I mean? And, AMC isn't going out of business at this point. They have enough capital. They have at a minimum, even without, even before the capital raise, I felt like they were, given what I was seeing on the sequential improvement in free cash flow, I thought they were going to be good through 2023 to just let the theater business improve a bit. But like now, they've gotten rid of debt. They've lowered interest expense. I can't wait to see what the numbers are. I know that the fourth quarter was a little bit awkward because it was super strong relative to it, but EPS isn't what I'm looking for. I'm looking for how did he spend the cash? Okay. And there are some things that benefited him as well. So when it all nets out, I'm going to be looking for, does he have enough cash to make it through the year? Because there's a lot of transition that's happening, and I want him to be able to make it through.
Yeah,
Yeah,
there's lots of things he could do. I think
there really are.
if he collaborated with maybe Netflix or something, I mean, that Wednesday on the big screen would be amazing.
Yeah, your kids love Wednesday. Your daughter, did your daughter love it, or is it just that she reminds you of her daughter?
He reminds me of my middle daughter, right?
She's so smart. Wednesday is such an easy character to fall in love with, in my opinion. I was a fan. You guys type it
Well,
in the chat if you guys enjoyed Wednesday on Netflix. Yeah. So there's a lot going on. Did we miss any other crazy? Okay, so here's the thing. This will
look,
come up from
Disney
time to
might,
time.
right?
Yeah, by AMC. This comes up from time to time. It's a very interesting. I mean, I'm not going to say that, of course, right? But what I do see that's happened that I think is very interesting is since now the competitors have gone out, and I agree. There's a couple of wonderful YouTubers that stay on top of this. You guys know some that I directly will try to give some love to every now and then, but someone told me not to be all promotional on this sort of thing. But like, uh, um, essentially, if you look at Live Nation, they kind of own the concert business. I've said this before. I think what AMC wants to do is own the theater business. It is essentially a non-monopoly monopoly when all their competitors go out of business but them. And so, that gives them a certain power that I think could be really great for shareholders of AMC. Now, some people believe that I'm completely insane on that topic. I don't know the answer to that. It's kind of just what I think is the way that the strategy is shaping up to look like, so to speak. But between getting the strategy to work that way and where he is at right now is a lot of execution. And I think that I don't know that Disney would buy all the theaters, because then it would be intriguing, because then other film producers would have to like coordinate for distribution of their film in a very particular way. So, and also, Bob Iger has a lot of wood to chop given that sort of thing. So I'm not 100% sure that that would be a direction that would make sense for Disney or AMC, given what they have as stated strategies for the next, let's call it 6 to 12 months. But let's see how the year progresses, because this is probably um, one of the most intriguing turning points. I mean, like, the whole last since COVID has been unprecedented times, but even right this minute, things are so unprecedented that it's like, so as you guys know, I listen to 400 of the 500 calls in the S&P 500. I try to listen to about 80% of them. And I was really shocked at, first of all, how many are actually doing okay, but the ones that are really not doing okay had the worst strategies you could possibly. I mean, they really just had the wrong strategy for the market environment. Okay, so there's that. But even the ones that are doing great are not giving full year guidance. That's very abnormal. Typically, at this time of year, you would be having them kind of close out last year and then give forward guidance for the full year. But because we've got just way too many moving parts globally, no one's doing that. And if no one's doing that, that also has implications for everything on down the line. Now, strangely enough, with the film business, it's a different animal, because those films are made 6 months to a year prior, slated, and then they got a show. And so that's one of the beautiful things about AMC, is that he can tell you what's in the pipeline. In fact, if you listen to the last quarterly call, he talked about the fact that he saw a really robust pipeline of movies, and then it's just about whether or not the movies are hits or not for the year. And yeah, so that's kind of how I'm looking at it. Um, Okay, I'm not going to comment on this one. I'd have to look at it in the most recent. It hasn't reported yet. I know you like the old Viacom Paramount, right? I personally don't have strong feelings on it. I'll take a look, and then when it comes out, I'll try to like do a little something on media in general. My real issue with the legacy, let's call it the legacy media companies, is that they have to figure out a way to get off of the cable, or they call it linear networks, is that new fancy name that they're calling it, which just means that it goes on a wire line, I think. So it goes to the cable company versus going through the internet. But all of them are taking it on the chin, because what they were charging you for your cable subscription somehow isn't necessarily translating into the discounts that they're giving you when you buy it direct via subscription. And Bob Iger talked about this on the Disney call, that for whatever reason, the previous CEO, he was selling it at a discount to try to shift more people and get more subscribers on streaming. The only problem was that he was making less money off of that than he was off of cable. And so that was not fun. So there's that. And he definitely did. I mean, like, if you listen to the Disney call, they didn't talk much about the film business, other than they felt that there would always be a place for going to the theater as a part of this branded experience. So, I didn't hear anything yet from any of the big companies that a theater experience isn't a part of the future. If anything, the only thing they primarily talk about as relates to that, as it relates to streaming, is that that network television is not going to look the way that it used to. So that would be quick and dirty kind of thoughts on that. But yeah, linear TV is a viewer watches a scheduled TV. Yeah, that's exactly right. Oh, that's why they call it linear TV. Sorry. You know what? I hear him say it all the time, but I never bothered to look it up. Thank you, Hadouken. It's, yeah. I mean, because you think like there's TiVo, there's all these different things you can do, but you're right. Thank you for clarifying that. Sorry. Versus like streaming, I guess, or whatever you want to call it. Thank you. Yes. Okay. Yeah, exactly. I agree with that. But we're going to focus on AMC, okay? But I love that you guys are throwing questions
And
at me.
thinking about charging different prices for premium seats.
Yeah, you know what? That actually works inside. I feel like I've actually experienced that when I was traveling abroad. So, and
Okay.
it works. People will buy it for sure. So, but what it will mean and how it will go, I don't know. I'm really intrigued to see what he does. All the other stuff, this awkward period, because right now truly is an awkward period for all shareholders. So I kind of get the angst and why people are not
All these
happy.
financial moves he's made, the reverse and the preferred stock, it's just stay in business, right? I mean, he needed capital.
He needed capital, yeah. Because and he needed the capital because there was a cap on there was a dilution cap. So this is where it gets really, I think that's what's made AMC so interesting to do videos for me on, is because this is a very nuanced corporate set of activities that's happening. And it all started because, unlike GameStop, who had no dilution cap, AMC had a dilution cap, and the board was unable to issue shares. Now, what they did, on the initial moment, I wasn't a shareholder at that time because I never went down this far on market cap, quite frankly. I like boring stuff a little bit. But then after I read all the things and I was becoming more open-minded, because one of my friends was like, May, will you please do something? And I was like, okay, I'm open-minded too. But it really is some of the most complex but intriguingly advanced corporate actions that I've ever seen. This is a really good question, Wayne. I'm glad you asked it, because the answer is a very hard no. You do not count extra shares. See, there's a very specific term that they always use. It's called shareholders of record. And that means something very specific. The record keeper is the DTCC. So if you've got some shares somewhere else that, like, no, you have to be a shareholder of record. That also is the case, oddly enough, as to why some people used to be issued certificates, but it is recorded somewhere. So if you call investor relations and they're not some like hack of an investor relations, they should get back to you and be able to find your shares. But these things are all recorded by,
Has he done it before? Didn't he do it at Vail Resorts?
yeah.
Okay.
What do you mean?
Didn't he do some type of like financial restructuring at
Yeah,
Vail?
Veo is complex. Okay, there's been a couple that are complex. It's just the frequency of the complexity that I just think is really boss. Here, do you know what I mean? Even like Vale was a little bit more straightforward. He did get some financing. I think at the time, like, you got to imagine in 2021, even converts were kind of in their nascency. Citadel was still very small at that time, and they were starting really a very early convert arb hedge fund at the time. I remember because, oddly enough, I was working in Chicago, so um, you know, it was just during that period of time. So at that time, the convert desk wasn't separated out from fixed income. And like the history of finance, I think sometimes people forget how fast things have moved. But as relates to Wayne's question, there's no, only the shares, the number. Okay, so only these shares that I showed you is the full count. Okay, only all of the APE shares and all of the AMC shares, the shares outstanding, those are the only ones that get a vote. You don't get to vote if you're short. You don't get to vote if you have options. You don't get to vote if you have them through a swap. You don't get to vote if you own them synthetically through a structure that is most likely an equity linked swap. Okay, that's what, or whatever, I guess you guys are calling it, Brazilian synthetics. If you're trading it out of Brazil, you may be calling it some kind of other synthetic if you're trading it out of Europe. Only people that have actual shares of either APE or AMC get to vote every single time. You should call your broker if you're not sure, and make sure that you are a shareholder of record. Now, I really want to be very clear on this. If you are somehow watching this from another country, you should double check that you actually own the actual shares and not some kind of synthetic instrument that your specific country is doing because there's some kind of special sauce going on. So, for example, a lot of people in Toronto, unless they have specific approval, my friend is in Toronto, right? They can't trade American shares unless they also have an account in the US. And then sometimes there will be instruments that trade, but technically they are not truly US shares. So definitely, if you are not in the US, yes, CompuShare is 100%. Yes, that's correct. CompuShare is the actual physical system that holds out who has custody of the shares. That's correct. But anyways, I'm not going to go into that complexity, but it is a good point, and you are right, Hadouken. Sorry, it's moving really fast, and I'm not. sure how I scroll up from this. So yeah. Uh, ah, so yeah, shareholders of record will get a notification. You should get a proxy. All shareholders of record of any shares. If you are not getting one, call your broker and just make sure that what the instrument you actually have is the instrument you think you have. Okay. Yeah. So let me tell you this one little thing, which is a point. If you're in another country, the ADR product, which is not what I think some of you guys are referring to, and I didn't realize it at first. So ADRs, GDRs, depository receipts, those things absolutely map back to the ordinary shares through a conversion ratio. So those people get to vote usually, depending on which country and what's going on and all this other stuff. Okay. So if you're not holding something that's what the depository receipt structure was for. But now, subsequently, there's all these other structures that exist. So that's why I'm saying it the way that I'm saying it. Hopefully, that clarifies. But even with that, you should double check with your broker dealer if you're not in the US and you own this not through the classic way that we in the US experience it. Okay, I can't tell what other questions did you see, but that was a really good question because I do think that's easily confused. The program can be recorded on. Yeah, exactly, Hadouken, TiVo, all the way. The catalog is probably yes. Yes. Back in the day, there was an actual record book, but now it's all done electronically. Unfortunately, it's done in the kludgiest possible way electronically, which is why it takes a couple days to clear your trades, et cetera. But it is what it is. So yes, all of that is. Thank you, Trendboard. That's accurate. Hadouken, I think you posted some clarifications too. Thank you for that. I'm just really slow. AMC will reducing the cost of seats as well. Oh gosh, you guys, I'm so bad at scrolling through this, but hopefully,
No,
post your.
they're just saying okay, nice. They're
Okay, there's
complimentary.
nothing I missed. Okay, on this one, we did. David talked a little bit earlier in the video on the Fibonacci's and how we look at it, how he looks at it. I just defer to him on those types of trading questions because you know, like I'm not as good at it as he is. Let me just say, let's just go ahead and admit what we're good at. I'm good at reading stuff and telling you what it means, and then having some thoughts on a much longer horizon. David is like quite good at charts. Also, Richard, who works with Gurula, is amazing at charts and how to do setups and stuff as well. So I defer to the two of them always. The question that you're asking, just another ape, truly is a trading question as far as that goes. And but what I can, the only thing I
Not
can tell
not
you,
any advice, but yes.
yeah. So David
Not
feels like the
actual
charts are,
advice. Yes.
yeah. And then the stuff that I'm really going to talk about with AMC is always going to be the actual conversion itself and how that works mechanically. Just hit the replay button on this or just rewind and you'll see I went through that. Okay. Oh, you guys, there's a lot of fun comments to David specifically. That's awesome. See, everyone likes David. I like having him on here.
No,
Um,
I'm in California.
yeah,
Chicago's cold. Chicago's so
Chicago's
cold.
cold. I liked Chicago a lot. I like the
Oh,
people
it's a
here a lot.
fabulous city. I love that city.
Yeah. But you know what? When it comes down to it, I'm a New Yorker. I'm really sweet. And then if you cross me the wrong way, I get really nasty. That's very New Yorker. I feel like the Chicago people still stay kind of pleasant. Um, like, that's so funny. Trend board. That's hysterical. That's awesome. I have some ADRs for sure because I mean, I like to do that. I never know what to do with the ordinaries. Do you know what I said earlier about what did you say earlier? I'm not sure what this refers to, but that's proposal two, and we do go through that earlier in the video for sure in great detail, and then I go through it in a couple of other videos. But I feel just another ape. You've probably seen some of my other videos, so I'm not sure if there's a precise question. Okay, I think I'm going to close it out because this went quite long. Hopefully, this was helpful, and thank you guys so much. And all right, good luck, guys. We'll see what the next stream is on. Take care. Bye.